Hello, this LP3 training video is for the cash drawer and bank balance section of the drawer register. So let's take a look at two areas. We have today's business, which is the loan register. And this is part of a series that actually goes over details of the loan register. And then additionally, accounting, drawer register, and then the drawer register. The drawer register does not show the bottom section for the drawer and bank transactions until the business day has been closed out. So if we come down here and we look at a report for a previous day's business close, 2/26/21, we'll see that the bottom section contains the drawer and bank transactions for the day, debits and credits, cash in, cash out for the day. If you're looking at today and you haven't closed yet, in order to see these transactions, you would actually come over to accounting and closing. And of course, making sure you're the only one in closing if you're going to be doing any transactions or doing the closing. So I'll say yes. The transactions for any checks that have been written for loans or any additional checks that were written for, say, to pay bills or vouchers, cash in, deposits, miscellaneous income. Those will all be in the closing screen. And then when you finish closing, that report for the day will generate and contain the transactions at the bottom of the drawer register report. And the loan register and drawer register are similar in that they have the loan transactions and the transaction totals, but only the drawer register has a listing of the drawer and bank transactions at the end of each closing as part of its report. So this report that was generated 2/26/21, let's take a look at these transactions and see how they add or subtract from the drawer and from the bank balance. Drawer cash, this is your starting cash in your drawer at the beginning of the day. So you would have closed out the previous day and you would have counted out $457.74. That amount would be the cash amount sitting in your cash drawer. We look over here and the first number is your cash drawer. Then there's a slash and then there's a second number. That is your bank. So how the debits and credits affect your bank for the day. We have a bank 2 and a bank 3. So say you want to take debit card payments for your company as a whole. You have a central bank. All your branches will use, say, for debit card payments, which is different than your branch bank. So the first bank, a lot of times people set up for their branch bank. So if you have money in the bank to lend out, if you have money coming in from your home office, this will be your local branch bank. Whereas you might, say, for instance, have, if you do bank account withdrawals from your customer, maybe that will go into a central bank for the company. That'll be your bank 2. Or maybe you have online payments, maybe that'll be a bank 3. In this case, we're just going to look at the items that deal with, say, a bank, and then and we have an NSF, so we'll look at that down here. So for the day, we have a cash collect of $1,087.94. That would be the transactions paid, payments 251, 563, 272. You add those up and it will be right here, cash collect $1,087.94. So we have this, which adds to your cash drawer. So 457.74 plus a $1,087.94 will give you $1,545.68. Bank still being the same. Then we come over here and we had a new loan for $1,000. And we can see that this new loan subtracted $1,000 from our bank balance. And that would be this new loan right here at the top for $1,000. So it didn't affect our cash drawer because we wrote a check and it came out of our bank account. So the software is showing when you add and subtract from your cash drawer or when you add and subtract from your bank balance. Next, we had a former borrower withdrawal. So we did a loan for a former borrower for $600. You can see that this came out of our account. It did not change the cash drawer because we didn't give cash from the cash drawer. We actually gave a check from our bank, so that made it bank account minus 1,600 added to that minus 1,000. Then we come over here to a borrower renew, which was an additional $302.38. And if you come over here, it did not affect the cash drawer because it was a check, which made the bank balance when we start out zero. You add that 302.38. So it makes from the 1,600 plus the 302.38, so it's minus 1,902.38. You can see your net proceeds over here is that amount too. And then after that, we had a withdrawal, which was the payment reversal. We had a payment come in last week and it didn't clear at the bank, so we had to do a payment reversal on that of $131.66. And that $131.66 here is the amount. And then we look that it was applied to the second bank. So in the software, it was set up to have that payment come out not of our bank here, but maybe a central bank for everybody if NSF fees and things of that nature. So it was set up to come out in a second bank, minus 131.66. Then we have a cash for drawer. So we withdrew $2,000 from the bank and brought it over into the cash drawer. And this withdrawal was actually part of closing and doing withdrawal right here. So we manually went in here and did a withdrawal, and we took $2,000 out of the bank to bring over for the cash drawer. You see that once we took this $2,000 in, it increased our cash drawer from $1,545.68, $2,000. So right now we have $3,545.68 in our cash drawer, and it subtracted $2,000 more from our bank balance, which took it from 1902 to 3902. We wrote a check here for a utility bill for $350. Expense category 5, and we'll go over expense categories and how to set that up to where utilities or rent or things of that nature have expense categories in the software to export to accounting packages. But for now, let's just show that this was a check that we wrote out, $350 for utility bill. And because it was a check, it minused another $350 from our bank account. So it took it from 30902 to minus $4,252. And this is just for reference right now that our account was at zero. And then we have these continue to minus out of the account. Next, we have cash in. So cash in this particular instance came from home office sending cash, say from their bank account over to our local bank account for our branch because we needed more money. Well, it's a two-step process. First, you actually take cash in of $5,000. So you would come over here in closing and you would take cash in of $5,000. And then the second step in that process to make it show up right within the software and in your bank is then you do a deposit of $5,000. And for this particular case, we did a note cash from home office. So right here, we'll see that it went into our cash drawer when we did the cash in, but that's not where it actually ended up being. So we did a cash in, it went to our cash drawer. And then to tell the software that, hey, this is in the bank, we went ahead and did the deposit, which put it over into our bank. So it took our bank from negative $4,252 to a positive $747.62 because the $5,000 added into the bank account. The first cash in shows in the drawer. Immediately do another transaction that shows deposit, which actually takes it into the bank account within the software. Next, we had under closing, miscellaneous income. We did we sold some candy, made some money somehow. This is just a way for you to add money into the system. That's just something that's not standard. So we did a candy drive or something else. We sold some candy, $50. So here, $50. You'll see that it added $50 to the cash drawer, and then from $3,495, it took it up to $3,545 and added that amount to the cash drawer. So our cash drawer should now show this amount. So this section down here for all the debits and credits, they will show when you write checks out for loans, but this is additionally all the debits and credits for other than loans that happen in your software, so that you can balance between what the software has as your drawer and bank balance and what your bank balance and drawer actually is. Can keep track of those transactions. And then all of this can be exported to a third-party financial software like QuickBooks or Mass90. So this is the bank and drawer transaction section of the drawer register. It will only show up on the drawer register after you close out the day. Otherwise, during the day, these transactions will be in the closing screen. And when you finish closing, then it will generate the reports and have a snapshot of all those transactions in the drawer register. And that concludes this training. Thank you very much.